All right. Welcome to this live intraday strategy webinar. Today is Thursday, February 17th. Sorry about the delay there. I just want to make sure we got a good mic check. If you guys can hear me, Aurelian, Steve, Ty, everyone in the room should be good to go. And just let me know if you can hear my voice, guys. Check. Okay, good to go. Thank you for that, Steve. I appreciate that. Okay, let's jump right in. So it's been an interesting week. We've got initial moves on the dollar, moving it lower like we were looking, but then we saw a little bit of a bounce there last night. So we do have, well, most of the event risk, all of the event risk is over for the week. So we're just straight price action from here. On the menu, we'll hit DXY, gold, and Bitcoin. First up on the session, Aussie, Kiwi, and dollar CAD from last night. British pound, dollar yen, and SPX from the previous night into the open of the week. Let me know if there are any other questions or trade setups you guys want to review. NAS 100. Okay, got you on NASDAQ. All right, so let's jump right in. Here is what the DXY looks like on the weekly chart. Okay, we stretched just shy of the 2021 calendar year open, which was 96.50. We've pulled back since. You know, guys, the risk is still for a reversal lower in the dollar. All right, when we look at this, when we look at the massive divergence into the high, the massive reversal candle we got 2 weeks ago still leaves the upside vulnerable while below 96.50. Here's DXY on the daily chart. So again, that outsized reversal, here's the recovery, here's the start of the week. It's just dribbled lower. The only levels that matter on the DXY by my part for the next couple of weeks are going to be 96.50 resistance, 95.20 support. It's the same zone that we've been in all week long. It is the critical zone that we're looking for on the DXY for guidance. Here's what it looks like on the intraday, guys. It's the same setup we've been tracking. So again, what it looked like last night, or this was 2 nights ago on the 15th, we were looking for that pullback, mostly just into this key zone of support. You got the 618 of the near-term rally, the 618 of the December or the January rally, and the objective yearly open. All that's lined up right here between 95.65 and 95.70. So for all intents and purposes, the pullback is at support. I'm looking for reaction here. This is your bullish inval. Okay, we raised it from 95.16, which was the low day close, to this level here, this confluence region of support. If we get back below this, call it 95.30s, that's the breakdown. That's the breakdown of the broader ascent. Okay, we'd start to look for the resumptive path towards a new low. But all things held constant, I have us at a major pivot right here into the open of US trade. Any questions on DXY? It's Thursday. You're essentially trading at the weekly lows. This is the 4-hour. Here's what the 2-hour looks like. Ty, here's the dual screen for you, side by side, daily and intraday. All right. That's a quick look at the dollar. It's been, I mean, most of the dollar crosses have actually been pretty boring. You got some play last night in sterling with the move higher, and it looks like you're trying to make a move on some of these crosses, but DXY has kind of been just a boring setup here. Here's what the gold setup looks like. And take a quick route there. I see a man in the room here today. So major breakout. I wanted to talk about this early in the session because of where we are in price. Now remember what we've been talking about with gold. It's all starting right here. We came into the start of this week eyeing this exact breakout. What did I tell you guys? If this was a break of trend resistance, we should look for a topside break. The pullback should be governed by that parallel, former resistance, now support, and then move right off. That's exactly what we did. We opened the week, went for a test of that slope, couldn't even get that low. Here's the rejection and move higher. Your key resistance levels at the high close from last year, that's 1903, okay, into 1923 which is the 618 of the decline. So a critical level, right? You got the high close, the May stretch high, the 618. It's all strapped up right here, just above 1900. Now that's on the weekly charts. You're getting that kind of clarity. Here's what it looked like on the daily. We broke through downtrend resistance, and I highlighted this yesterday or a couple of days ago as a risk. An outside day reversal off of uptrend resistance is a very, very provocative area. That's a very bearish sort of development. Now on the intraday chart, it looked like this, and we noted this is your near-term bullish inval. You're essentially constructive while above 1841, but if we get the pullback, that's where you want to look for an accelerated drop if it's going to correct. Otherwise, that might be just a pullback and a break higher. Well, that's what happened, guys. Here's what the daily chart looks like. Okay, you can't make this stuff up. This is one of the cleanest breakouts we've seen in gold in some time. All right, there is uptrend resistance. Here's the breach, no meandering, just a ripper, just a ripper. So again, the 2021 yearly open comes in at 1998. And again, I have a resistance zone here. It stretches a little bit higher towards 1920. Here's what it looks like on the intraday chart. Okay, so break, false break scenario, not quite. The pullback couldn't even make it to 1841. Literally 1849 held the low. Here's the slingshot, looking for 1898, looking for 1910, 1912 on the upside. It has to close the week above this slope, guys. If it doesn't, then this would be a false break scenario. But as long as we stay above 1870, let's call it, you're looking for 1898 and 1898 and 1918, 1920. Critical levels. All right. That's number one and number two. Hey, Marcin, I see your list there. I'll try to get to that as soon as I can. Gold, 3 is Bitcoin. So real quick look at Bitcoin. I just wanted to highlight this because a lot of people have been asking about whether this is a real recovery and a real breakout or not. I think you still risk another setback here, but the basic level of significance is going to be 40,922. Here's what the daily chart looked like back on the 15th. Again, we had turned ahead of that 38.2, turned upward, didn't make any progress. That was actually the high. And since then, we've kind of meandered lower. Constructive above 40,922. Key critical resistance, 46,200, 46,700. That's your breakout zone to mark reversal in Bitcoin. So again, maybe a little lower. Maybe that's further dollar strength towards slope, towards that 38.2. If you get a I was looking at this earlier today, if you measure 2 equal legs off the high, if this is going to be a classic correction, the 100% extension comes in just a hair lower. So something like this, look for a reaction there. Absolutely critical. Okay, 46,200, 46,700, still absolutely important resistance. Ethereum, just a quick touch on that. Very similar scenario on the daily chart, okay? We basically ran into that 38.2. While we did close above it, we posted an outside reversal candle right off that level lower. Here's the second attempt, and again, failure there. So risk for a little bit of a setback here as well. 38.2 comes in at 28.54. Monthly open resistance, bullish inval comes in at 26.88. So some notes there on the Ethereum parallel trade. Okay, so that's number 3 and 4. Aussie dollar. Back to the majors. Here's what Aussie looks like. Well, first, you guys have all seen this chart. I've showed you this many times, coming off of massively important support. Namely, the 70 handle has been absolutely pivotal on Aussie dollar for the last, 5 years. Major swings and pivots along that line. Here's the recovery. weekly resistance doesn't come until 72.70. That's the objective yearly open. Then you got slope. Then you got this pivotal region, and this is going to be the bearish inval. 73.64, excuse me, 73.85. You have the 200-day moving average just above, or excuse me, that's the 52-week moving average just above. So 2 levels on the upside, constructive while above this level. From the weekly chart, seems pretty clear. Daily chart looks like this. Here's your monthly open, okay? You defended the monthly open numerous times before pushing higher. Again, near-term resistance, breakout level, okay? Bullish inval. Well, so I'd have bullish, to answer your question, I'd have bullish inval at the monthly open, like way down here. But if you want to play it more conservative, it should basically be at this week's range low. So like just shy of 71. Does that make sense? Here's what it looks like on the intraday chart, okay? And here's what it looked like on our last update. So this is from last night. Here's a series of sliding parallels based off of this original slope. That's what all these parallels are. Again, the bisector here, really nice inflection, resistance, support, resistance. It's been resistance all night long. Okay, so that's still near-term resistance. I'm constructive above the weekly open. That's 71.29 on the upside. Like I said, 72.60 is really the critical level to look for. That's the objective yearly open, and just above that is the objective yearly range highs. Just above that, my favorite Fibonacci confluence is 100 off the low, 618 off the high. That's 73.40 into 73.67. I'm liking it. I'm liking it. If we get it, like I said, if you get any pullback today, nothing should surpass 71.28. If it does, then this, idea of the broader recovery, I think, is null and void. But all things held constant, looking to see if we can get a tag at 72.70 on this one. Any questions on Aussie? So you're looking, essentially most of the com block is in a very similar scenario. Here's what Kiwi, well, again, Aussie, no change from last night, right? Here's what Kiwi looked last night. Little bit cleaner in that this pitchfork formation, really too early to rely on it, but we got some play. We got an inflection off the break with a 25% parallel looking higher. I want to see if this essentially this formation holds. Here's what it looks like right now. So really, really clean, right into the 50% retracement, right into the median line. You're seeing some exhaustion there. It's the same trade as Aussie, okay? So don't double up, but essentially you're constructive above the weekly open, which is 66.40. On the way up, 67.52 is a critical range right here, okay? And just higher, that 100% extension, 38.2 of a longer retracement. It gives you 67.95, 67.92. So again, tighter range, right? The bias we had was right, the levels we had were right, but just not much momentum behind it, right? We moved right into it and pulled back. Same thing with Aussie. We moved right into slope resistance and pulled back. We're not getting much volatility, but hopefully that starts to kick up as we get later into the month. So that is Aussie and Kiwi. Any questions on either of those? You do have the RBNZ press conference on tap next 22nd. What is that? I think that's next Tuesday. Okay, last but not least from the com block is dollar CAD. So also a very popular one. You might have seen this one I put on Daily FX yesterday. The main focus here is going to be this range break. And I think the range break is imminent. I don't know if you get it today, but I think you get this over the next couple of days. So from the weekly chart, we had reminded everyone that we had turned from critical inflection resistance. Okay, really nice confluence region. Here's a 618 off the highs from last December. Here's a high week close. That's for the calendar 2021 year major pivot. You can see for the last 4 weeks, guys, this has remained resistance. And now heading into the open of February trade, what's happened is that we've set up the monthly opening range right below that key resistance. So maybe the clarity in the Momo is not there yet, but we'll get there. Again, momentum on the weekly just completely flatlining at 50. Here's what dollar CAD looks like on the daily charts. One of the best things I love about this trade is that it is a clear and well-defined monthly opening range. Here's your monthly open. You set a low, you set a high, and it's been ping pong ever since, back and forth, back and forth. Now, aside from this outlier here on the 10th, you've seen a series of lower highs and a series of higher lows. Now, typically these wedge triangle formation patterns are resumptive. So typically you'd be looking for this to kind of to resume higher. However, the reaction at the resistance region suggests, again, that the risk might be for a swing lower still. The yearly opens at 2640. Bullish inval. Resistance at 2767. Bearish inval, let's call it, right? And we've been looking for a break of this ever since. It's been boring. Again, like I said in the webinar on Tuesday, if you're range trading, good on you. You've probably been doing pretty decent with this one. But if you're looking for the swing, if you're looking for the breakout, we haven't gotten it yet. We haven't gotten it yet. And the bottom line I put on yesterday's piece was, this is an imminent breakout, okay? We're looking for the break for guidance, but the January rally is at risk below 2767. So what does that mean? It means we're looking for the breakout of this for guidance, but all things held constant from a trading standpoint, you're vulnerable while below this level for a move lower. So I actually thought we were going to get this drop yesterday to really start to follow through and make a push through. That didn't happen. I'm flat on this, just as a disclaimer. I haven't got a chance to get into it, but I am looking ideally for sort of a short scenario. If one of two things happens, either we break 2640, we get a drop and a bounce, maybe opportunity to take the next leg lower, or if we get a rally back towards this region, a short against the high might be a tight move if you get a decent signal. But at the end of the day, we're staying neutral here, okay? We're keeping the powder dry. If it breaks to the upside, 128.13, 128.53 right on tap. Downside break, you start to look at these two critical regions, which would need to hold support if the broader uptrend is going to hold in dollar CAD. All right. Now, a lot of people are going to continue, and whether it's training by just Twitter or training by, the markets, always, oh, well, Canada is a big exporter of oil. It's going to move with oil. True, guys, on a relative basis, but it's not going to be a tit for tat, okay? Here's what the oil trade looks like today. Obviously, you're seeing stronger oil. That dollar CAD is moving pretty benign, although there's broadly CAD strength for the week. You're looking at it's sitting at the dollar CAD lows. But I wouldn't stick with that correlation. Speaking of that, a quick segue, guys. This is still absolutely critical this week. Here's oil on the weekly. I showed you guys this on Monday. I showed you guys this on Tuesday, that ascending slope line for the pitchfork we've been following since last year. We're still at the upper parallel. Remember, on a closed basis, we never have been able to clear that. So from the weekly standpoint, a third divergence point here in momentum, right? From a weekly standpoint, you're at resistance. So right off the bat, you're like, all right, well, I don't want to get involved in any fresh longs because we're right here at resistance. From the daily standpoint, you're at resistance, okay? Didn't really get an outside reversal candle or anything too bearish to kind of call the reversal, but you're seeing ongoing divergence as price is failing and faltering at uptrend resistance. Remember, if this is going to break, the break should be a slingshot. It should not be a sort of meander higher. So for me, this is the quintessential failure. I would suggest still at risk for a near-term pullback here in crude oil. Look at it on the intraday. Don't really have anything new. I just wanted to highlight that pitchfork, we just threw this on. I don't know if it was the webinar on Monday or Tuesday, but if you guys recall, Not necessarily sticking with it right now, but still continuing to govern the decline and suggests that the risk is for a little bit of a drop lower. Is euro dollar still in the range bound? So euro is not on the list, but I will get it for you. You know what? Let's take a look at that now. So that's oil and dollar CAD. Any questions on either of those? Okay, number 9, here's euro, Aurelian. Here's what it looks like first on the weekly chart, and then we'll go into it step by step. The last euro update I gave you guys was right here. This was published back on the 10th. And again, our focus was we rebounded off of former resistance, turned support last year, turned support again. That rebound took us through the descending channel resistance. So we were looking for that pullback. Do you remember what I said on Monday? We were looking for that pullback to fall at former slope resistance, turn support. This is a legit breakout. That pullback should find support along this slope. Into the beginning of the week, we added this 618, 1264, looking for a low ahead of 1264. Was that it? It might have been. Here's what euro looks like on the daily chart. Okay. Would have liked to see a tag of the 618, 1264. The low executed, I think 20 pips off, 1281. And then we turned higher. It's been kind of boring ever since. Aurelian, I wouldn't necessarily say it's range bound. Near term, yes, if you're looking at this scalp chart, but looking at it from a broader perspective, that's the longer term downtrend. We broke above it. Well, let me snap it back into place. We broke above it, failed to hold below, and here we are again trying to hold it. This is still my bullish inval. I don't want, I mean, again, just a disclaimer, I don't want price to get down that low, but if it were, that would still be an opportunity to look for possible low. The breakout scenario is still 1450 and 1500. We talked about both of these levels earlier in the week. So look, we opened the week, we turned lower, didn't quite make it to that 618, but now we've just been testing this slope line, former support as resistance. Want to see this build. All things held constant, I'm also going to label this as the weekly opening range. Okay, Monday, Tuesday, Wednesday stretch gave you to that high that we made yesterday, but essentially you're still looking for a breakout of this range for guidance. Bullish inval 1264, upside resistance 1445 and 1500. Core inflation data hits next week on Wednesday for the Eurozone. They're expected to see a print of 2.3%. That's the final read for January. I expect to get a little bit of an improvement from 2.6, but aside from that, nothing new from the European data event risk. Aurelian, any questions on Euro? No change to any of those levels. Again, here's what it looked like right into the start. This was the last week, right? We dumped, went to that 38.2, and we've been straddling it ever since. Aurelian says no, thanks. All right, cool. So that's Euro. Okay. Number 9. Number 10, here's sterling. So is this a breakout today? I hope so, because this thing's been very quiet and just a very boring trade. Again, regrettably, I'm not holding anything here, but I really wanted to see if we can get a much more dramatic push higher. Here's sterling first on the weekly charts, guys. Sorry about that. What am I doing? Here we go. The high week close for the year is 36.76. We registered that right into the open of the year in January. Just above that is the 52-week moving average. That's 37.25. That is your critical zone of resistance for sterling. Now, if this is sort of a rebound off of downtrend resistance, downtrend support rather, this would be downtrend resistance. Okay. That being said, I do think that this challenges this slope sometime over the next couple of weeks. Here's what it looks like on the daily chart. A little bit different of a play, really clean here. One touch, two touch, three touch confirms. Here's the fourth of that slope, right? That basic trend line off the highs that you made in late July of last year. The 2021 calendar yearly open was a very nice pivot in price all throughout last year. The median line, this is just a parallel from the December highs of the same slope that we're looking at from this. This is the original slope, parallel, parallel, right? Right off the highs that we made in December, pivot, support, pivot, resistance. That same slope is right there. Again, 36.74. So I want to see a rally into this low, into this zone. All things held constant also, guys, what I do want to know is that this is also right here, the monthly opening range highs. So objectively, not Mike Boutrose's opinion, not Jamie's opinion, fact, if we were to break above this zone, that would be an opening range break to the upside. Now, again, I wouldn't want to get too excited because you're coming up against heavy levels here. But if we clear this zone to 37, guys, there's nothing to stop this from 38, 35 and above. So it's really like make or break on this rally here for sterling into this key zone at the 2021 open. Here's what it looks like on the intraday, 2 hour. Not that exciting, right? If you zoom it out to the 4 hour, looks like a little bit more of a parent breakout, but at the end of the day, we need this Momo to hold. And ideally, we see 36.74 and a reaction there. Again, remember, that's the breakout we need to see to validate sort of the move higher here. Remember, Jamie's looking for like 39.40 and change on that sterling trade, guys. So I take it step by step first. If we clear this hurdle, yeah, I think there's a lot of room. I think there's a lot of room. Okay, so basically Jamie's shooting for that 100% extension on the swing trades. Questions on the British pound. You're essentially closed on data. You have nothing for data on the British pound over the next week, basically. So again, look for broader dollar price action to continue to drive this one. Last but not least from the FX block is dollar yen. And I gave you guys an update on this earlier. So here's the Aussie levels, guys, unchanged, right? We're basically still straddling that 38.2. Here's the gold levels. We covered that. SPX didn't cover that yet. But let me, here was the update. Okay. Let me hit dollar yen real quick. So here's what dollar yen looked like into the open of the week, right before on Sunday, as we were heading to the US Open, or to the Asia Open. And the focus was the threat for some pullback. Why? Why was that focus there? Well, we talked about the rejection of 116.08. 116.08, guys, was the level that we had tested right into the open of the year. I'm gonna move the marker here for a second. Right? Here's your yearly open. Right into the start of the year, we checked that 2015 swing low. Here's the August swing low for 2015. It converged on the median line for the upslope and it charged to turn lower. Okay, we documented that very, very well. Now on this last advance last week, it's the same exact level. That to me was a quintessential opening range break failure. You look for a break of the yearly opening range, and not only did you not close above that, you closed well off that region, right? An exhaustion high. So we came into this week saying, look, the risk is for a little bit of a move lower, but at the end of the day, dollar yen, more than any other pair, has the cleanest yearly opening range. 2 tests of support, 2 tests of resistance, right on the money, right? So the inherent risk was for a move lower. And again, we were talking about the dollar and the risk for the dollar pullback. So the inherent risk for the dollar cross is, again, a move lower. Here's what dollar yen looked like on the daily chart. All right, I don't think I gave you a daily update on the last one, did I? No, it's just a 240. So again, there was the rejection last week, a reversal candle the following day, put us in this zone right above the 618 of the yearly range, right above this month's open. So here's the crash. We're now sitting at the 25% parallel. Here's what it looks like on the intraday chart. This was the first target. The yearly open was 115.09. Slope 115.90 right here. Excuse me, I say 115.90, 114.90. So we're basically at this level right here, right below the 2022 open. 618 just lower, and again, the February low just lower. Okay, at this point, the risk remains weighted to the downside while above the objective weekly open. So you guys might want to just jot that down. That's 115.30. As long as you stay below that, you're looking for a possible stretch towards 1450 and beyond. I wouldn't really necessarily go for the lower parallel, but if you're holding shorts, maybe just bring down your stops to break even or better above that Asia high there, looking for 1456 on this drawdown. And actually, now that we have a high, low, high, woo-wee, my favorite fib confluences. Once again, 618 off the low, 100 off the high. 1456, excuse me, 1455. Keep an eye on that. So that, my friends, is the abomination, number 11. And that pretty much wraps up the FX pairs. So SPX, and we covered gold already, but I do want to cover SPX. This is the chart, believe it or not, I find myself staring at the majority of the day these last couple of days because, man, the levels have just been exquisite. So check this out. Here's the daily chart. Again, you can't make this stuff up. Before I even get into that, hell, here's the weekly chart, guys. You could have traded this whole SPX decline just off of this. We noted and documented the break in the decline above the first major original slope. That one found support around the 52-week average. We talked about 45.35 needing to hold weekly resistance for the last 2 weeks. That's the high close that we made for right here. The low close for November, former slope support turned resistance, and that held for the last 2 weeks. Key support we highlighted was very well defined as well. That's the 618 of the rally off the low, which converged on the 52-week moving average. So any way you slice it, 43.64, 43.74, it's critical support near term. On the daily chart, looks like this. All right, there's that 618, perfect pullback. Here's the rebound of the last couple of days. Monthly open resistance is 4,500. That needs to hold if this formation has any merit to it. And on the downside, the same level we found support. Look for slope, but it's really going to be 43.64. Intraday chart looks like this. Get you to 240. Oh. All right, there's that break we saw last week. Here's the tumble. Forget this slope at this point. Actually, I'd probably stretch this out to this low. All right. Near-term support at that confluence zone, right below 4,400, 43.90, and then 43.63 is going to be, again, if that breaks down, guys, you're looking for a new low. That's just a target at 42.45, but I'd be looking for a tag finally that 236 we missed back here in January. That's 41.97. All right. Questions on SPX? That's number 12. NASDAQ, number 13. This is for you, Ty. Here's what NDX looks like, brother. So I don't have the cleanest scalp setup on this, but I did want to highlight, this is the setup that we put up together last week or whatever it was. Lower parallel, gaps into the 75%, fails. Gaps into the 75%, fails. Gaps into the 75%, maybe you can get a move higher towards 14,700 before you fail. Here's what the intraday chart looks like. Okay. I just wanted to highlight the 38.2 has been taken out and ducked below many times already. Here it is. boom, boom, gapped above, back below. But I'll leave that on there for now and highlight this near-term zone. Forget this. That's resistance. I say that's your breakout zone. It's last week's high, right? Key support is at the 618. That's the 618 from the advance off the lows you made back in March of 2021. So it's basically the March calendar year or the 2021 calendar year retracement. All right, so Ty could see some upside here. I'd be cautious. I'd be looking for a high sub 14,886. You know what I mean? Oh, wait, stop traffic. Your monthly open. Oh, that's what that line was. I'm sorry. That's what that line was. Yeah, that's your monthly open. Key resistance range. That's your bearish inval. Now, on the downside, if we do see the breakdown of risk that the S&P is essentially flagging right now, and you see this consolidation, higher lows, lower highs, remember, these triangle things typically are resumptive patterns. So if we break back below downside, there's nothing to like 13,180, you know? Even if you look at previous price action within this level, you see a decent pivot, maybe near 13,600, but it's a big risk. And so forth is in SPX. It's the same exact deal. If we were to break these lows, there's a lot of room to the downside. All right. So keep your eye on both of these. Possible exhaustion ahead of 45,000 in SPX. Possible exhaustion ahead of 14,800 in NASDAQ. Does that help, Steve? Oh, I'm sorry, that was for Ty. Does that make sense? Here's the side-by-side, sir. Well, there's not actually anything new on the side-by-side on this one, but you get the drift. All right, so that's NASDAQ, number 13. We got a couple minutes left on the session here. Let me go through Marchins back in the house. Pound yen, JPY, Euro yen, Swiss. You love the Swiss, Marchin. Swiss yen, and ranging dollar Swiss as the Fed is stepping up. I think dollar Swiss should find support for a nice run to the upside. Yeah, I don't know how I feel about that, Aurelian. The Fed, let me take a step back. Guys, the discussion I think has got out of hand completely. I mean, if you're watching CNBC or you're watching Bloomberg or Reuters or any of them yesterday, it's absolutely insane. Again, like I said earlier in the week, the spread, the distribution of expectation for rates is insane. Some people are saying, no, they can't hike more than 3. That's going to be too aggressive. Some people saying there's going to be 7 hikes. You got Bullard yesterday on the phone saying we might be getting 50 basis point hikes instead of 25. I mean, it's radical. So, Martin, the only thing I would say is be careful with trying to say that the Fed coming in is going to fuel dollar Swiss higher by de facto case, right? I just don't think necessarily that's the right way to think about it. Markets are pricing in, I would say, 3 to 4 hikes, maybe even 5 at this point. There is room, right, for that reprice to stretch higher if we do get, remember, in March, we get not only the interest rate decision, but we get updated quarterly forecasts, updated dot plot projections, updated outlooks for growth, employment, and inflation. So let's say we get into that and we get a lot more heavier expectation for higher than 4 or 5 hikes, then I think you start to see the dollar really catch like a ripper. But I wouldn't necessarily say I'm bullish dollar Swiss for that reason. In fact, I've specifically stayed away from dollar Swiss because I think the technical clarity here is clear as mud. I don't think it's just not there, right? So let me show you what I'm looking at first. Here's dollar Swiss from the longer term prospect. Like, what the hell was that? Back on January 22nd, to me, objectively, looked like the first break and breach of downtrend resistance since the 2017 highs. The next week, we came back, tried to break back below that slope and held. To me, this is a resumptive trade all day long. I would have been looking for 95. But what the heck is this, right? And then we've talked about the possibility for dollar weakness. So I can't get excited about it. Marching. Look, near-term weekly resistance, you got the 200, it's a 52-week moving average, converging on the upslope here, supporting the upslope near 91.80s. If we look at this on the daily chart, your whole yearly opening range is pathetic, just below the December highs, just below the November highs, just above the December lows. So I'm not a big fan. I'm not a big fan. Let's see if we can come up with anything for your consideration, though. So you got that 618 there. Okay, looks like I might have added that here on the intraday. Let me just clean this up a bit. Okay. Is there anything up here similar? Could be. March, and these are range bound conditions any way you see it, brother. I'm not going to try to force a bias on this. This is, I mean, as range bound as you can get. So despite the fact that we were looking at this multi-year downslope, it's just lost efficacy. I mean, you could see some pivots along it, but I'm not going to stick with that. At the end of the day, not only is it a range, Marchin, you're slap in the middle of the range. You're not near the top of the range. You're not near the bottom of the range. Again, you know, put a pistol to my head, I'd say maybe you find some inflection here or here. But, you know, all things held constant, Marchin, it's Thursday, and it seems like a basic opening range break. Okay, so here's your weekly open. You set a high, you try to test a high, you can't test the high, won't break. You break the lows, you're looking for a Thursday, Friday low. So 91.80s, 91.60s max, maybe on the next couple of days. Resistance 92.70, that hasn't changed. All right. I'll revisit this one for you if you want next week. I need to spend a little bit more time with the charts here. Again, when the technical clarity on the weekly is not there, typically, there's so much more to look at. The 200-day moving average at 91.60 as well. All right, pour more fuel in that fire. Pour more fuel in that fire. Not bad. Not bad, Marchin. So the other ones look a little bit more interesting to me that you wanted to look at. So that was dollar Swiss, number 13. I want to take Euro Swiss first, number 14, or Euro Yen rather. Here's what Euro Yen looks like. I think he asked about this last week. It looked like a 1, 2, 3, 4, 5. Remember I was telling you it looks like it needs a recovery or a correction rather. So that's 1, 2. I would have liked to see a new low. Now I'm not going to be a stickler and say we need to get that before we move off, but it certainly would be. It'd make me feel a lot better if we had a 1, 2, 3. You know what I mean, Margin? So like one more low towards the lower parallel, and then resumption. I do like euro ultimately higher, but I do also like dollar yen lower, which is yen strength and euro strength. You're kind of trying to fight the pair to see which one's stronger. So look, as long as 131.55 holds, that's key resistance. 131.60, let's call it. You need to break through that to get the resumptive move higher. Ultimately, for me, I would be looking for one more low to fade. Now, interestingly enough, I bet you if we were to move the 618 to this low, that's the December low. That's the December low. Yeah, so this retracement right here is the yearly, essentially your yearly range, because the yearly opens right here. So that's your yearly range low, yearly range high, euro yen's at the 618. Now, aside from this one, looks like here, this is your weekly opening range, never actually broke. Well, yeah, that's your first test of a new low. That's your first test of the high, kind of breaks through but holds. Your weekly opening range is preserved. There's your Monday, Tuesday stretch. So again, I'm not big on Elliott. You know me marching, but 1, 2, 3, 4, 5. I want to see a 1, 2, 3. That'd be my ideal scenario. Does that help? That's euro yen, number 14. Number 15, what was another one you had there? Pound yen. Pound yen. Oof. Neutral. Yeah, neutral. Look at this trade. I mean, the only thing you can say with confidence is that you're testing the upper bounds of the range. But other than that, like, that's just not my cup of tea. And again, look at things on a holistic approach, Marcin. We're looking for possible sterling strength. We're looking for that to touch into resistance. And dollar yen looks heavy. So again, that's yen strength and sterling strength. No surprise, you're seeing these weird crosses kind of hold. Man, there's nothing for me here on pound yen. Unless you think pound is going to turn over and for some reason you want to try to fade this, but otherwise there's nothing for me here. Marcin, I'd have to rework this whole chart from scratch. It looks like I haven't touched this in a long time. So I'll leave that one there. What was the other one you wanted? Pound yen, euro yen. We got Swiss yen. Yeah, so Swiss yen is going to be another one. I don't even have that on my charts. Marcin, let me ask you a question. What makes you look at these pairs? Is it longer term trades you're looking to sit in? Are you in Switzerland and you're just heavy on the Swiss crosses? I'm kind of just really interested in see why you think all these Swiss crosses are all that important. They have really small ranges. Their ATRs are pretty small. Scalping. Okay, so you're looking for stuff that's really tight range that you can scalp intraday. Okay, yeah, that makes sense actually. That does make sense because these range bound markets tend to be really good for scalping because it's just back and forth and back and forth. But as far as trying to figure out a directional bias or a swing type of trade setup, I don't have it. I'm not even gonna try to art like I did have something on this. This slope is not even something I'd pay too much attention to. Now, obviously, already I can see this. People on the internet's starting to say this is going to be a head and shoulders formation. Here's your left shoulder, head, right shoulder. That means nothing. That means nothing until we get the break. That's just conjecture. So now I'm not necessarily bearish, Marcin. But what I do like to do is even if you're in an uptrend, a lot of times if you take a formation just to map out what your bearish inval would be. And for me, would be right there near 25, 75, 25.80 right here. And on the downside, that's a basic 38.2 from the advance off the lows that you made last year. Monthly open support. Oh, what's on there already? 124.10. All right. Marcin, does that help? Get a quick fix on what's going on here. Your monthly opening range is preserved, man. Here's your monthly open. You essentially just stretched into a high, and we've been doing nothing ever since. So at the end of the day, try to get an objective break here to give you the directional bias. But for now, that would be a quick snapshot interpretation. I like Swiss, and it's the only central bank not willing to take a foot of gas, its foot off the gas, excuse me. Well, second, including JPY. I was just gonna say, right? Because Japan's notorious with that stuff. But I see your point. He says a lot as usual. So it does help, Marcin. Cheers, mate. I'm always down to look at random pairs that I haven't been looking at or the exotics, but I want to see price action give us a little bit more of a clear directional bias, first of all, and then a clear constructive trade. So where the technicals kind of give you can see guidance in the ascent and the descent. All right. Any other questions or trade setups, guys? If there are no more, we'll go ahead and wrap it up here. Keep your eyes on the close of the week and all of these crosses. If the dollar is going to hold, again, mid-range, remember these weekly charts, we really got to see what happens on DXY, on Euro, and all of these to see if these validate if the breakouts are actually legit. This means on most of these setups, guys, we are looking for a period of prolonged possible dollar weakness, okay, if this breaks lower. So remember the bearish and the bullish invalidations, excuse me, on all these trades are pretty darn close. Marcin says, see you Monday. Actually, you won't. Monday's President's Day, guys. Markets will be closed, so I will be out of the office, but I will see you right here back on SB on Tuesday and Thursday mornings. Guys, have an awesome weekend. Best of luck trading. Cheers.